So for President Obama and Governor Romney, who's going to benefit the most from these numbers, if either one of them will?
I think it's a draw. So Obama can turn around and say, well, they're better. They certainly are better than what we saw the last couple of months. Also, you put this in the context that first-time claims for unemployment have been down for the past month, so that's a bit on the positive side. And on the negative side, it's just, I don't know what, Bernanke had said that, we're sort of stuck in the mud. We're just dragging along at this level of growth, the economy as a whole, the growth of employment, and again, because it's the slower growth, we don't see much change in the prospects for those who are unemployed.
So what does this mean for American workers moving forward?
Well, we've talked about this in the past. I think that the big question mark is Europe right now.
So the balance of Europe matters for the American worker and ultimately comes back to our own elections.
Yeah, and especially because Obama was pushing, exports as the saving grace of the U.S. economy. I mean, that may be what we're faced. I mean, if you look at where does demand come from, it either comes from consumers, it comes from investment. That depends on, obviously, ultimately, that there's markets out there for the new capital that's going to be built. It could come from government sector. It could come from exports. If exports are lagging because of Europe, the government, we're actually contracting, government spending. So without that export sector, I think it's not likely, unless there's something that comes out of the government. I don't think that's a fiscal policy, a stimulus. That's not likely.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're